Hello everybody, welcome to another one of my investing videos. My name is Mark, and today, actually it's yesterday now. Today is now Saturday, February the 9th, 2019. And so technically yesterday I cashed in my first profit of the year on my weekly calls, and I bought to close my 106 call for $5. I made $78, and then I sold to open this $105 call right here. I took in $128 and some change for that, and this call expires in 6 days on Friday, so I feel very good. I feel very comfortable about my position. Let's go to my transactions and let me show you what I'm doing. So I am back in the game once again, and I could not be happier. I've been sitting on the sidelines all month of January. I didn't make one single trade because I opened a new account with my Roth IRA with Ameritrade, and it took them an entire month to upgrade my account to options approval, and they gave me free trades for all of that headache that they put me through, which is cool. And so I'm back in the game. And so on February the 4th, I believe that would have been Monday, I bought a call for $1,600, okay? And this is my leap. It's a $105 call. It expires January the 15th on 2021. That's 100 weeks from now, okay? And so that's my long call. And it cost me $1,600. That's my total risk right there. The worst case scenario is I lose $1,600, which is not going to happen because I'm going to sell weekly calls. If you watch my videos, you know that that's what I do. It's called a diagonal spread when you buy a leap call and then you sell the open weekly calls at different strike prices. That's diagonal calls. At some point I'm going to do a video explaining the different vertical spread, horizontal spread, and diagonal spread. It sounds tricky. It's not. Okay, but that's what I like to do. So I bought, this is my long call, and then I sold a $106 call at the same time. As you can see, 12:28, almost like less than a minute later, I sold to open this $106 call, took in $82.23. And it expired today, or actually I should say it expired yesterday, but I didn't let it expire. I bought to close it for $5. So 82 minus 5, I made $78, and that's my first profit of the year. Closed out that contract, and then I sold to open a $105 call, took in $127.23. So far so good, ladies and gentlemen. I feel very good about my position and about the way things are going. Now let's take a look at Microsoft chart, and this here is the 6-month chart from Microsoft. And you can see that there was one time that it hit all the way down to like $94, but really the meat and potatoes of its level of support is like in this area here, which is at about, let's say, the $100 level, okay? And then its resistance level, it did hit a high a couple times, like way up there, but the meat and potatoes would be like right in that area right there. And so we'll say $110. So Microsoft has a range of about $10, and this is in the last 6 months. And I really like this very narrow range. I did a video a couple weeks ago about the way I feel about the market, the way I feel about the world. I feel that we live in very uncertain times, very unpredictable. At any given point in time, I think the market could go up or down. Volatility, recession, I don't know what the heck's going to happen. And if we look at the SPY, this is the S&P, and we go out a few years, you can see that the trend has come to an end. It was good while it lasted, but you can see right there that the trend has come to an end. We are no longer in a bull market now. We are no longer in a bull trend, I should say. Now, I don't know what you want to call this. We are just in some very unpredictable times here. And this right here would be January of 2008. And so, if we go to the 1-year chart, let me erase all that. This is the 1-year chart. It goes up, and then it just goes up and down and then goes way down and way up. So we've hit some headwinds, we've hit some turbulence, and so I don't feel comfortable going completely long on any particular stock at this point in time. So I feel very good buying some calls instead of buying stock on Microsoft. And I picked Microsoft. I normally do Twitter, but I would rather play around with Microsoft. And the video that I did a couple weeks ago, I feel that the number one priority that you should be thinking in your mind is preservation of capital. Protect the money that you have, okay? And then if you can do that, and then whatever money you make will be like frosting on the cake. So my goal is to make darn sure that I don't lose the money that I have. And the way that I like to do that is buying stock options, buying and selling calls, buying long leap calls and selling to open weekly calls because of the wonderful money that you can make on the theta. That's the imbalance in time. And let me show you really quick what I mean. If you are an experienced option trader, you probably already know what I mean. And now we go to the option chain. And so here's my $105 call. Okay, I spent $1,600 for it. And now these are the weekly calls. Now, let's say I only get $50 a week. Okay, and I'm getting more. You saw that I got $120 or $128 for my last weekly call. It expires next Friday, and you saw that I've already made $77. But let's say I'm only making $50 a week. Okay. This is my long call right here that I bought. It is a $105 call. It expires in January of 2021. So that's 100 weeks, okay? Cost me $1,600. Now, if I'm making $50 a week and I have 100 weeks, okay, what is $50 times 100? That's $5,000, and I've only invested $1,600. So do the math, right? And the worst case scenario is that I lose $1,600. And the only way that I really can get burned is if Microsoft drops like a rock and it goes down to $90 or $95. Then I would have a decision to make, okay? I would either just close out the position and lose some money. I'd lose a few $100s. Maybe I'd lose half of this. Maybe I'd lose $700 or $800 of it. Or I could try to hedge it. I could sell lower calls, or I could even just keep the call, buy some puts, and try to make money on the downside and hold on to the call, and then just start doing a put spread like what I'm doing on the call spread. I'm not sure what I would do, but that's the one way that I get burned, okay? And if it so be that I lose $800, that's not a big chunk of my money. I'm barely losing anything. Now, the normal person, what would he do? If he liked Microsoft, he'd buy 100 shares of Microsoft, right? And so if I wanted to buy 100 shares of Microsoft, Microsoft said $105, click the buy button, put in 100 shares like that, and click review order, and it cost me $10,500, and then I'd place the order. I'm not going to do that. So why would I want to do that when I could very simply go to an option chain, click on this $105 call option, which gives me the right to its contract to buy 100 shares of Microsoft. Click on the buy button, right? And then I put in my one contract like that, put buy to open like that, and let's put in $1,600 like that, $16. Now I'm only spending $1,600. So which would you rather do? Would you rather spend $10,500, or would you rather spend $1,600 for the same control over the same number of shares of Microsoft at $105? And the worst case scenario is I could lose maybe half of that if I get burned and Microsoft drops like a rock, something crazy happens, Bill Gates, I hope that doesn't, quits his job or something. Actually, I don't even think he's CEO, but something bad happens and Microsoft goes down. That's the worst case scenario. Now, if Microsoft went down to, if I did buy 100 shares and Microsoft went to $90, and I'd be down $1,500. I don't want to put up $10,000 when I only have to spend $1,600, and then on that $1,600, I just sell weekly calls, and you saw that I could make $5,000 on a $1,600 investment versus making $5,000. And how am I going to make $5,000 on that stock? Well, I guess I could sell covered calls, and I make $5,000 on a $10,000 investment, but that's only a 5% return versus making $5,000 on a $1,600 investment. So 5,000 minus 1,600 would be $3,400. I make a $3,400. That would be a triple of my money, right? That would be a 200% return. So I think I'll stick with the call options, and the risk is very low. I've only got $1,600 of my money at risk. I got all this money cash available for withdrawal. I've got all that money sitting around waiting to, almost like the bench, like you know, you're playing for the Lakers or the Celtics. That's like my bench. They'll come in and they'll, you know, my starters, it would be my call. This is my starting, or maybe my starting quarterback, right? And if things go wrong, then I got all that money waiting to come in and save the day. Tag team wrestling, whatever analogy you want to use. So I love what I'm doing. I feel very comfortable buying and selling calls with Microsoft, and I think everybody should get into doing this. You do not need a lot of money to do this. I am slowly building my money, but I've been doing this for a few years now, and I'm always adding money to my Roth IRA. This is my Roth IRA, and I think everybody should get a Roth. A Roth IRA is completely tax-free, unlike a 401k or a traditional IRA, which are tax deferred. You still have to pay taxes on that. So anyways, that's my first profit. That's my video, and that's my first profit of the year. I made a nice $78 of a profit, and now sold to open this 105, and I'm hoping to make most, if not all, of that money. Stay tuned for the next video in the coming weeks, and enjoy the videos. And as always, if you have any questions, feel free to leave in the comments. I'll answer any questions, or if you have something, an idea, something that you want me to discuss, something about options that you don't understand or that you want to know more about, I'll be happy to do it. So that's it for this video. Thank you for watching, and have a good day.